Welcome, everyone. It's the Tuesday Night Hopper webinar. I'm Rob Booker. I'm joined by Jennifer Thornburg. Hi, Jennifer.
Hi, Rob.
We have a special presentation in store for you tonight and a special invitation as well. Jennifer will reteach the Hopper, but she'll do an abbreviated version of that for those of you that are already familiar with the Hopper. We won't introduce old concepts to you. In fact, we're going to try to spend as much time tonight reviewing some of what you already know in a succinct fashion, and then bringing to your attention some additional tips, tricks, and strategies that make the Hopper work nicely. Additionally, we'll look at the last 7 days of Hopper trades. We'll look at some good ones, we'll look at some bad ones, and talk about what's going on in the world of Hopper trading. And then we'll preview the red Hopper. It's an adjustment to the standard Hopper that I have been working on for a few weeks now, and that is coming up very soon. We'll also move over to the 15minuteforex.net website later on, in about 40 minutes from right now, to answer your questions about the Hopper and let you see us in real time, where we share our screens and talk to you live. And it's a little bit more personal and not as much separation between us as you see right now in a webinar. It will be a perfect place for you to ask us some questions about how many pips the Hopper makes, and what kind of profits you can expect from trading the Hopper, and of course how you can join us to trade the Hopper live together and learn the additional strategies that are based on the Hopper trading system itself. So without further introduction, Jennifer, why don't you take it away and let us know what's happening in Hopper Town.
Okay, I would be happy to spend another Tuesday evening with my Hopper friends talking about the Hopper. It's no longer an introduction. Probably everybody here has already had a formal introduction to the Hopper, and we've been through some of the rules, and we've all enjoyed sharing some charts and trades together. So what I'm going to do tonight is, as Rob said, an abbreviated review of the Hopper, what it is, how it works, and I want to show you some charts that were taken from this week's Hopper trading charts. And if we have time, we can go to my MetaTrader charts that are live, and I can take you through some time and show you sort of what, how it looks, not just pulling one picture out of a chart, but going, streaming through some live charts. And oh, to end with, I have something very cool. I had a Hopper friend on Twitter share some charts with me from some trades that he took, where the Hopper assisted him getting in and out of some trades that he's taking, and it's gonna be my pleasure to share that with you.
That is so great. That is so cool.
Yeah, it's really great, and it's just wonderful. All the buzz going on around Twitter about the Hopper. People are really excited about it, and we were talking on TFL TV today, Rob, and I just can't stop thinking about how funny it is to me that it's just so simple. The Hopper is such a simple strategy. It's such a simple concept, and people who have been looking at the MACD on their charts for years just laugh. They just scratch their head and laugh, because here is the Hopper. It's just been sitting here for a long time.
Yeah, waiting for us. On that note, if you're new to the Hopper, which it looks like about 150 people sending in their notes and questions are new, tonight you're going to learn everything that you need to learn to use the Hopper. We're not leaving anything out. We've just done this presentation a few times now, and so we can get through it a little bit more quickly, which works to your advantage. Less time watching us do a presentation and more time making some money on the Hopper. Jennifer, the Hopper is for making a quick 5 pips, or maybe even holding on for something more than that with very little drawdown.
Right. So when we started out, we talked a little bit about surfing and using that as an analogy for how the MACD works. It's all about waiting for momentum, recognizing when some momentum is building, and then make sure you get your trade pointed in the right direction and you get to take a ride. That ride can be good for 5 pips, it can be good for 10 pips, it can be good for 100 pips. It just all depends on how you want to play it. But the Hopper really is all about helping you find an entry on a trade, and then there's lots of different ways that we can manage it from there. And I can't wait until November comes and we get into our more advanced series, because there are a million different ways to do just that. So without getting ahead of myself, on the picture in front of you is our sister surfer, just so we can remember that you are looking at the MACD and you are thinking momentum. And it's not so much about just looking for an entry into a Hopper, but you also want to keep in mind that you want to recognize and sort of feel the power that comes with some momentum in the market. So on the screen in front of you, sorry, Rob, go back one last time. This is it. This is the whole hopper in one screen. So you've been sitting here staring at it for a few minutes, and I want to let you know you've got it. That's the whole hopper. Now you can go to the next screen. I promised this would be abbreviated, so last week I think I had a 60-second lesson on the MACD, and today I have like a 10-second lesson on the MACD. It just keeps getting shorter and shorter, and the reason for that is because the MACD does all the work for you. All you need to know is that we need a MACD. I use my default settings of 12, 26, 9, but you can change them if you want to. I have been experimenting with different numbers, different setting numbers, and some of the different hoppers that I use, I do change those up, and we'll get into those later on. But you're welcome to change them around and see what happens. So you don't have to get too legalistic about it or too, worried about it. Essentially, what the MACD does is it takes a fast moving average, a slow moving average, and it takes a moving average of the difference between the two, and it's all, pretty complex math, but it all does it for you and crunches it into a pretty picture on your chart. There you go. So here again, just to review the elements, the important elements of the MACD is going to be the MACD line, which is the dark heavy blue line on this chart. The zero line, which is actually not a line, but I drew a red line in there just so that you could quickly identify it. You should get your eye accustomed to finding that plane where zero is. As the momentum builds, pushing price higher, the bars are going up, and as momentum builds, pushing price lower, the bars are going down. We also have the trigger line or the signal line, which is the little red dashed line, and we use that for in lots of different ways, and we're just going to preview a few of those tonight. You can go to the next slide. Okay, so this is it. This is the whole hopper trade. When the MACD line crosses over zero, it's a hopper. So you can see the zero line, and you can see where the MACD line crosses from below zero to above zero. That's a hopper. That's the whole hopper right there. It is the entry for taking a trade. When it goes from below zero and it crosses through the zero plane to above zero, it's a buy, and when it goes from above zero to below zero, it's a sell. And go to the next slide. So I just put some really simple rules that you can jot down right now, or you can get when the recording comes out for a 5-minute hopper. The first thing you have to do is pick a trading session. We've talked a little bit about finding trading sessions that we have talked about is like the European session, which is usually around 8 o'clock in the morning in London. The U.S. session is usually around 8 o'clock in the morning in New York, and the Asian session, 8 o'clock in the morning in Tokyo. That just sort of gives me a starting point for when business picks up and when volatility picks up. As you know, it's a 24-hour market, so it's not really like the market opens at that time, but that is when business starts to happen, and that is when we start to see some volatility that we can trade. I think that was my charts disconnecting and reconnecting. I'm not sure if you could hear that.
Oh yeah, we hear everything.
Okay. So those are the 3 trading sessions that I choose from, and the second rule is just to trade the 5-minute hopper during the first 3 hours only. Reasons for that is because that's when the most volatility happens, and that's when the hopper is the most reliable on the 5-minute charts. And then the last rule is just to pick an exit strategy, and we're going to talk about several different exit strategies, and you can take the hopper and you can add your own exit strategies to it. That's the really fun thing about the hopper. So we can go next and look at some charts from hopper trades that happened yesterday. So this is a pound-dollar chart on a 5-minute chart from the U.S. session where a hopper trade produced anywhere from 5 to 15 pips. So the red vertical line marks the entry, and if you go down to the MACD, I highlighted in yellow where the MACD line crossed from above the zero level to below the zero level into those histogram bars going down. If you had entered this trade exactly at the time the hopper happened, so right when the hopper happened, if you had entered this sell trade, you would have gotten your 5 pips very quickly, or if it was me, I would have gotten my 5 pips because I like to take 5 pips only on this sell hopper trade. And if you were a little bit late to the party, which also is like me, it's like me to be 1 or 2 bars late to getting into a trade. That's just how I roll sometimes.
Fashionably late.
Yeah, fashionably late on the entry. I just want to make sure I'm seeing enough momentum that I'm going to be happy to be in the trade. I'm going to be happy to be in the Hoppa. What you might have experienced was a drawdown of 8 pips, minus 8 pips before price turned and went in our direction. So when it did turn and go in our direction, it safely cleared the 5 pip mark and went as far as 10 pips, and we could have managed that by a number of different ways that we'll talk about as we go on. So you can go to the next chart.
There's 2 comments to make here for those of you watching this for the first time or who have been looking at this for a while and have some questions. Number 1, 5 pips is not the only profit target. Remember that. It's easy to forget that when we talk about it on the webinar, but we do realize that some of you like to go for more. This is completely suitable for that, as Jennifer just discussed. Number 2, it's not just for scalping. You can apply this on the longer-term charts as well. We won't get deep into that right now, but you can apply this to 1-hour charts. I apply it to 15-minute charts, and Jennifer's even shown examples of 4-hour charts. So it's not just short-term scalping, it's also useful on other time frame charts as well. What about this dollar CAD chart, Jennifer?
Right, and along those same lines, trying to remind myself to keep it abbreviated because I can really get off on a tangent when it comes to scalping, because I'm definitely not a scalper. This is definitely not a scalping strategy. What this is it's finding a number that you're comfortable with that you can repeat over and over again. And I have my combo trading strategy, which a lot of you here know about, and you see me post those on Twitter. And I have my regular trading strategies, and the Hopper gives me additional trades that fit in between my longer-term trades and whatnot, but it's not necessarily just for scalpers. So if you're like me and you don't like to be called a scalper, just hang in there for a few more minutes with us tonight because I have some other charts to show you. And here is a perfect example, dollar CAD.
Well, then I'm not going to make this webinar too long, but I got to say something now. If you are a scalper and you do like short-term trading and you are tired of people messing with you about that, let me tell you something. You're my brother, and we will go to battle together to reclaim the good name of scalpers everywhere. And when I wrote Adventures of a Currency Trader, I interviewed scalpers who work for hedge funds who do a pip at a time 200, 300, 400 times a month, and they're awesome. These are great traders. So we got to stop. We got to move on here. But anyway.
Okay. No, that's a good rant. You know, we need to do a podcast on that because that has a lot more venom where that came from. So this is one of my favorite 5-minute charts. This is dollar CAD, again from the U.S. session. And this was a trade that was good for 5 to 30 pips. And again, that vertical red line marks the entry. So you can see where the MACD line crossed from below up above the 0 level into those histogram lines. Down by the MACD, there you go. And at that moment, I put the red vertical line in there so you could see exactly the candle that correlated with that moment when the hopper happened, when the MACD line crossed over the 0 line. I'm tired of saying the MACD line crossed over the 0 line, so I'm just going to start saying the hopper happened because that's just a lot more fun to say, okay? So we'll have to put that in the notes for any newcomers. So when the hopper happened on this trade, you can see that there was basically no drawdown. These are my favorite kind of trades. You can also see that we were able to get our 5 pips pretty quick. I mean, it just wasn't a whole lot of thought that had to go into it. And then additionally, if your favorite number is 10, you could have a 10 pip profit target on these trades just as easily as I have a 5 pip profit target on these trades. And you know, Rob is the author of Strategy 10, and a lot of you already are familiar with that material, know and have experienced, as have I, that you can generate a lot of wealth from 10 pips at a time. So this is a great strategy for just 10 pip trading. And right now, I've been noticing that Rob's favorite number is 20, especially from the 15-minute charts. So 20 could be your favorite number. Lots of different ways to do this. And I'm going to lead that into one of my last favorite ways, which comes from the MACD. And I'm going to show you just a preview into another strategy called the trigger finger. So on this trade, we enter the trade on a hopper, and we exit the trade on a trigger finger. Trigger is when the MACD line crosses over its trigger line. That signals the exit of the trade. Another signal to exit a hopper trade would be when the MACD line crosses back below the zero level. If we get into a really strong trending market, even just in 3 hours, it's just running up for 3 straight hours. A better time to get out of the trade is when the MACD line shows you that that upward momentum really is coming to a substantial pause by falling all the way back down to the zero line. When that happens, and we hold on for that moment when the MACD signals the exit, sometimes we can get a whole lot more pips. Sometimes we get right back out at break evens. It just depends on what the market's doing. But if you happen to catch the market during a trend, the trigger exit or the MACD line crossing back over zero can get us out at a much higher level when the market is trending up, get us out at a much lower level when the market is trending down.
Now, it's not just for trending markets. That's a great question that's coming through a lot. It can be used in either. We're not going to get deep into the differences between trending and ranging markets because the base strategy itself is really about 5 pips at a time. When you expand it into greater numbers of pips, your win percentage goes down, but your risk to reward ratio improves. When you have a 5-pip profit target, your win percentage is very high, 85, 90, 95%, and your risk to reward is skewed toward the negative, but that's okay. They balance each other out. And one other question that comes through is something really interesting from Brett Ferguson. He says, it seems like it always draws down a little bit. And that's true of most strategies, and you're going to have some drawdown. And what's nice about this is that if you miss the hopper entry that Jennifer says on the candle close, remember it's a candle close on this chart, at the time the candle closes, if you miss that trade, you have 5, 10, 15, 20, 25, you have about 25 minutes during a session to come back. So you can go to the bathroom, you can get something to eat, blah, 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 and you're not going to miss the whole thing completely. So there's some time to set these up without drawing this thing out forever. Jennifer, what's going on with this Australian dollar chart?
Okay, another one from the U.S. session that was good for 5 to 20 pips. And what I want to point out about this one is you notice that we enter the trade, and there very little drawdown again on this one, which I love. And we go to our 5-pip or 6-pip profit target within 10 minutes, which I love. But if you're wanting to hold on for 20 pips because that's your number, or you want to hold on for a trigger exit, what you need to be ready for is the fact that you're going to see your profit come and go. So at the edge of that red circle where I got my 5 pips of profit and I'm done with the trade, you can see the white candles floating back upward. Those are bullish candles going back up, and if you were still in the trade and you were up 5 pips, now you're back down and you're getting close to your break-even mark, or it could have kept going for a while, even taking you back into negative numbers. If 20 is your number and you don't care, then that's great. If you don't like to see that because it creates anxiety and chases your peace away, then you'd be like me and you just want to take what comes quickly, naturally, easily with the least amount of drawdown. This is a great strategy for adding some regular trades to your day that don't add a whole lot of additional risk to your day. So this chart is just to show you that you need to be ready for seeing your profits come and go if you want to hold on for the longer profit targets.
As a reminder to everyone out there, the stop loss is going to be anywhere between 8 and 15 pips on a 5 and a 15-minute chart. You can expand and contract that number depending on your profit target and your personal win percentage. But between 8 and 15 pips is the stop that we're typically going to use. As I mentioned before, there are multiple combinations between stop losses and profit targets that will be suitable for you. A lot of traders out there who post hopper trades on Twitter are showing us trades where they've made 50, 60, 70, in some cases even more pips than that, with a very, very small stop. Other traders are just racking up 5, 6 pips at a time on their charts with a wider stop but a higher win percentage. What's right for you may not be right for everyone else. Just remember that as we go. Euro pound, man, Jennifer, you're looking at lots of different currency pairs. Previously, we only looked at the euro dollar, so it's true that this can work across the board on a variety of different currency pairs.
Oops. was going to say, I thought I turned my Twitter off. It wasn't my Twitter.
Oh yeah, that's my tweet deck
That's
flying.
hilarious.
Hope I don't get any vulgar tweets that interrupt the webinar tonight.
uh, Okay, well, one more thing on that note about stop losses. That is really an advanced topic that would take many, many sessions to discuss because there's lots of different ways to do it, which is exactly what we intend to do. But I can also just tell you briefly that if I enter a hopper trade and I can't sit with it and stay at my computer, I put a stop loss of 15 on it, period. That's it. 15 pips when it's the shorter term chart such as a 5-minute. If I can sit with my charts, I'm going to stay with it, and a lot of times, if it's a failure, the MACD line is going to go back up over or back down over the 0 level when it's only minus 8 pips. And that's why Rob says it's 8 to 15 pips. So 8 seems to be a magical number. It happens a lot. I get minus 8 frequently, and so the risk was actually only minus 8, but I had an actual stop loss of minus 15 on there. So it just depends on how how you're going to be trading each and every individual trade as you go. So moving on, this is the Euro Pound 5-minute chart again from the U.S. session. I thought I had other sessions in here. Sorry about that. So this one was only good for 5 to 10 pips, and what I did not like about this trade was it took a long time. I would probably have gotten bored and just bailed on this trade because it's going kind of sideways for a long time. And if you had stuck with it, you would have been rewarded, and you could have hit your 10 pip or possibly your 20 pip target, depending on how you wanted to manage the trade. But the important thing is that it was a hopper, and it was a successful hopper. You can go to the next chart.
All right. As a reminder to those of you that are wondering where you can get a copy of this gorgeous looking MACD indicator with 2 lines on your MetaTrader, when we send you the recording of tonight's webinar, we will also send you a copy of this MACD indicator for your charts.
Okay, and so this is an example of a trade that I really dislike, even though it also was a winner. This is an Australian dollar, Japanese yen, 5-minute chart from the U.S. session. And the drawdown was 8 to 10 pips, and that was 8 to 10 pips legitimately risked to barely get 5 pips if you were lucky and you timed it just right, because it turned around. If you can see where that final candle spiked down and touched the circle, that's about where 5 pips was. So that wasn't really the way I like to see him roll, and this very well could have turned into a loss. So this is just an example of a trade that just didn't work out that great, and there's no reason why it wouldn't. You look where the vertical red line is going down, and look in the MACD where the hopper happened, and you can see that the MACD line had great angle to it. It wasn't going flat. There was not an indication that momentum was waning. We had these long bars.
Good.
What's that?
Everything looked good.
Yeah, everything looked good, and it just wasn't a good trade. So I'm here to tell you, sometimes they're not going to be. And as a result, just be quick to shut it down. If it's not working and it's not doing what you want it to do, don't wait for it. This is not fundamental planning for long-term economic decisions or anything like that. It's just short-term technical trading. So if it doesn't do what you're expecting to see it do, then just get out of the trade and be ready to get right back in the next one. As a matter of fact, I didn't mark it on this chart, but you can see that right after this trade, the MACD line crossed back up through 0 and made another hopper happen, going back up the other direction, and it looks like it would have been a successful trade with no drawdown whatsoever. So even if you do get a loss, you're going to find that time and time again, immediately following the loss is a winner. So you can quickly put it back. So we finally have a chart from the European session, and this is the polar opposite of the last chart. This is the kind of thing I love to see. I love the pound dollar. And I love to see a trade that has 0 drawdown and goes to profit target within 5 minutes. That makes me very happy. So the red line marks through the candle where the hopper happened down in the MACD. And I like the angle and the slope to the MACD lines. It's just showing that there was no hesitation. MACD did its calculation, and it came up with this message to me, the trader, that there is momentum present and it's time to enter a trade. So in this instance, you could have held on for up to 30 pips, well, 20 to 30 pips, depending on when you wanted to close it. But if you closed it on a trigger, I believe that was about 20 pips.
Yeah. Had some great questions come through. Does trading with the trend improve the odds? It not only improves the odds, it also improves the number of pips that you can go for. We'll talk more about that in later sessions and, of course, in the course in November. I had a good question. What's drawdown? It's a great question. A lot of people aren't familiar with that terminology. Drawdown is when during a trade the candles move against you and cause you to experience a loss, but you don't close the trade. The loss that you experience while holding the trade open is drawdown. It's drawing against you, and that's the loss that you experience but maybe don't close with it. So every profitable trade usually has some amount of drawdown, or some amount of time during which the trade went against you, and that's what we mean when we say drawdown. Now, there are other definitions of drawdown that include equity curves and all kinds of things. But for the purpose of this webinar, what Jennifer is referring to is when you take the trade and you're waiting for it to get to its profit target, you do experience at times a loss, and that's called drawdown, or going against you. You could also just say, and there was no going against you.
Right, perfect. You know, and also along the same lines of the question that's come up twice tonight about trending versus ranging markets, I just have one thing to say about that. When you are using the Hopper trade as an assist to whatever your current trading strategy is, there might be times, such as non-farm payroll report, that you would expect a large move, or you would expect some trending behavior to follow the release of an interest rate decision. Certainly on the 5-minute chart, a trend, you know, is going to look a lot different than on the daily chart. I'm not talking about extended long-term trends, because on the 5-minute charts, there's just no such thing. But what I am talking about is if you have reason to believe that the trending environment could be setting up, then that might be a good reason to pick one of those exit strategies that you know, could possibly give you a few more pips, such as the trigger or the MACD line crossing back over 0. And when the market is not trending, you're going to get a ton of 5-minute range trades, 5 minutes up and down and up and down and up and down. You might even get more pips that way if the market is really, really ranging rapidly between two levels. So I'm not suggesting that you stay away, that you only want to trade during a trend. I'm not suggesting that at all. So hopefully that made sense. And then here is European session dollar CAD on a 5-minute chart. And let's see. The red line marks the entry. Oh, and I know what I wanted to talk about on this chart. We have our sister surfer down there. She got a good ride as long as she waited to make sure there was momentum. So in this instance, the MACD crossed below 0. So the hopper happened before the session happened. So my trading session started right where the red line is. Remember I said we want to keep it to the first 3 hours of the trading session on the 5-minute charts. So the actual cross happened a little bit before the session started, and then as you could see, before the session started there was a lot of sideways activity, and you might remember from last week we talked about when there's no momentum, prices going sideways, the MACD lines are really short and they're just going sideways. And even the MACD line and the trigger line, all of it just went sideways. It just went completely flat. That is a visual representation of no momentum, and you can't go surfing when there's no wave. So, what would you do in this sort of a situation? And what I would do, and what I did in this situation, is I place. Can you see where I drew the red line under price?
Yes.
Where it made a low when the MACD had crossed and it was going sideways and it was below the 0 line, but just sort of snugging up against the 0 line. I drew a line there, and that all happened right before the session that I was set to trade. And my intention was that when price, you know, if there was going to be some momentum building to the downside, price would again cross through that level like a support line. And sure enough, when that happened, the MACD lines start to show that we have momentum building, we have some a wave setting up. That's why I put the surfer in there, so I hope you enjoy that. But in this instance, it really did go for a good 30 pips, probably even more if you had waited on this pair to get out of the trade when the MACD line went back up over 0.
Yep. Lots of great questions. I want to address just a few of them, Jennifer, if you don't mind. Mike Jordan, nice to see you here, Mike. You're absolutely right. The angle of the red line was very shallow where Jennifer shows the yellow area in the trade. This can be misinterpreted as an area where you don't want to take a trade. It can also be interpreted, Mike, and I know you agree with this, it can also be a time when the currency pair is about to break out and really start moving. So it can be a good thing. The nice thing about it also is if it doesn't go anywhere and it starts to go against you a little bit, you can exit without a violent move against you either. But I have found that this low volatility can lead to high volatility. Also, getting questions like, do we use divergences or Renko or fractals or other indicators to either clarify the trade, extend the profit target, or avoid taking the trade in the first place? And the answer to all of those questions is yes. We fully endorse any methodologies that you use that you would like to layer on top of this methodology. I've been trading for 12 years, almost 13 now, Jennifer for 10, 20, in 23 years of combined trading experience. And in teaching thousands of traders as I have traveled all over the world, I have found that you do best when you learn something here tonight, get some mentorship to really get it down well, and then start to apply some of the rules that you know and love from your own experience. And that's what we're here to do tonight. That's why we do this. We do better by teaching it. We clarify our own beliefs. We get better at trading it. We meet those of you who are best at it. You help us to improve it. It's a very virtuous cycle. So lots of comments coming through about confirming indicators and extending profit targets, and we love it all. We just love it all. There's not a lot that we would disagree with you on because your experience stands on its own 2 feet. We respect that experience that you have, and this is something that we think you could add to what you're doing additionally. So the hopper gets bigger. I love that you included these charts. This is fantastic stuff.
Yeah, and we're going to answer that question in just a moment when I share some charts from other people, where what we're doing here, what I'm doing on these Tuesday night webinars is giving you a tool that I call the hopper. It's a tool that comes from a free tool that's already on your charts. That's the MACD. And it's going to assist you, or it could assist you if you like it, in all of your trading. It doesn't have to be a standalone system, although it could be that as well. So, okay, so the hopper gets bigger. We're going to the 1 and the 4 hour charts. I think I ran out of time for the 4 hour charts, but I know I at least have a couple of 1 hour charts. So let's have a look at those.
Well, why don't we do one 1 hour chart and one 4 hour chart?
Okay, quick rules for the 1 to 4 hour hopper charts. Trading session, it makes no difference. You don't have to look for the trading session. To enter your hopper trade, you're going to enter the hopper on a hopper. When the hopper happens, the MACD line crosses over the 0 line. That's the entry. The exit is going to, we have lots of different ways to close the trade. Sorry, I'm skipping to rule number 3, but you can pick a target similar to the 5-minute trade where we picked 5 pips or 10 pips or what have you, or we could close it on a trigger. It's essentially the same thing, only the numbers are a little bit bigger, not a lot bigger, 10 pips to 20 pips. Then I also recommend using a stop loss up to -30 if you're going to trade from the 1 and the 4 hour charts. So that's it, slightly different from the rules on the 5-minute chart. So you can go to the next slide and we'll have a look at the charts. Here is a dollar CAD. And these trades were entered when the hopper happened, and they were exited on a trigger. So they worked perfectly. They crossed all the different time trading sessions. And you can see where the MACD line crossed over 0, enter in the trade, exit the trade when the MACD line crosses over its trigger. 34 pips on the first one, about 50 pips on the second one. Super simple.
Let's look at the 4 hour chart. Here's from a real hopper trader. Oh, this is so cool.
Okay, this got sent in from a friend of mine on Twitter. Thank you so much, Chris, for sending your charts in. And it is an example where he was trading. It looks like he was using some support resistance lines that I can see he drew on his chart. And the hopper helped him find and time his entry. And the trigger helped him time his exit. And what I love about this chart that he sent me is that the hopper signals are working really nicely with support resistance. Love that. I just love it when they tell you that, when your indicators tell you the same thing. So as price was rising up off of that support line, the hopper rose up and crossed over the 0 line, triggering an entry to a long trade. And the exit came when price ran into that resistance line, and at the same exact time, the hopper, the MACD was doing its calculations and coming up with a signal to close based on a trigger.
That's so great.
So I think I have one more from him where he mixes it with his Fibonacci's. If you want to just take one more chart, it's a Fiba-Hoppa. Chris didn't really call it that, so I hope he doesn't mind that I'm mutilating his chart here a little bit. It's a beautiful chart that he sent in from his tradingview.com, and he is doing a Fibonacci trade, and it looks to me like he's using the hopper cross from below to above 0 to help him time his entry, and then he used some Fibonacci levels to help him find his exits. And I know that he's done really well with this. He's been talking it up on Twitter, and good for you, Chris. Thank you so much for sharing your chart.
Wow.
And I think that's the end of my presentation, and we're on to the red hot Hoppa.